What's up, military millionaires? I wanted to talk to you briefly. I made this post in the Facebook group asking, where do people put their cash and or capital when they're waiting to invest it? And the answers are pretty interesting. Some of them are exactly what I expected. Some of them are not what I expected at all. And I'm going to go through them just so that you can see what successful people are doing and what the majority does, what the minority does. And then also, I want to tell you kind of my thoughts on this. So at the end of this video, you will understand some great ways to store your capital while you're building it for that next investment. And this is very important because sometimes people just leave money in a checking account and then they're not earning any interest on it, and it's just sitting there losing interest, losing value to inflation while you're waiting to invest. And that kind of contradicts, and probably takes away from your future investments. So it's important to at least earn something on your money while you're waiting to invest. So this is going to be very valuable to you. So make sure you smash the like button and subscribe to the channel if you got something out of it. And also jump in the Facebook group so that you can participate in these polls and all the other valuable information that goes on in there. We're going on 7,000 followers. Yes, YouTube definitely just passed Facebook, but they're both huge and I love you. So thanks. All right, the first one, we had 50 votes, as you can see right here, for high yield savings account. And I think this is a great option. This could be like an Ally bank account. Now, granted, these high yield bank accounts, they were earning 2% a few years ago. Now they're down under 1%. They're not as high. There's a new player in the world called Yada, and I'm going to do a review on them soon. Graham Stephan actually just invested in that company. Very interesting, kind of gamifies savings. But high yield savings accounts are still better than a normal savings account because you're earning at least decent interest, which means you're losing money less quickly to inflation. And there's no risk. You're not going to lose the money sitting in a savings account except for inflation, but that's minuscule. There's no like crazy, whatever. At number 2 was index funds. And now there's a little more risk to this, but the long term, you will outpace inflation. So yes, if you put a bunch of money into index funds and then the stock market crashes, that may hurt you in the short term for an investment. However, over time, long term, the index fund will outpace savings accounts and everything else, traditionally 7-8%. So at least you're earning money on that. And depending on what you invest in, index funds don't have to be super aggressive, super risky. So you can kind of moderate that. I said high yield savings account and index funds. Those were 2 of my options. The next one up with 9 votes is whole life, or the infinite banking concept. Now, whole life insurance has gained a lot of steam lately, but I will caution you to make sure that the where you're getting your information on whole life oftentimes is people who are paid commission for teaching you about whole life, right? And so they're incentivized to push you towards whole life instead of term because of the amount of money they get commission-wise is just vastly more valuable. So I generally think whole life is good for people who have the money to superfund or overfund their account so that they can access capital right away. I don't necessarily think that a whole life fund or policy is right for people who have to just start putting money in because it's going to take a long time for you to build up that cash value to where it actually makes sense and starts earning some income. So that's a good strategy if you already have some wealth, or it could be a good strategy. I'm not going to say it is. I haven't done it. Just caution you not to get super sucked up in that because it will take a while to build up that cash flow. So if you're still, if you don't have a ton of capital, I've got a lot of thoughts on that. We'd be happy to talk. There's some good ways, some bad ways. It can be very valuable, but just know that it's more of a savings fund strategy than an investing strategy. So it's an interesting technique. It's very complex, but next one is utilize lines of credit and then pay them back down. So I do this as well. I have a HELOC, like a $70,000 line of credit, and I'll use that to buy something, and then I'll slowly pay that back down, and then I'll use it to buy something else, and then I'll slowly pay it back down. I don't always pay it back down as much as I should before the next one, but that's a good strategy. Yes, you're paying interest on the money, but it's a good way to access capital, and you can pay that back, and you kind of owe yourself at a lower interest rate. The next on the list was CDs, or certificates of deposit. Now, this is great if you're long-term holding capital, so you can do 6-month CDs or 1-year CDs. So if you know it's going to take you 2 or 3 years or 1 year to build up that cash for the next investment, a CD is a good way to outpace a savings account, and you can't touch the capital, so you can't dabble. But if you need to access that capital like 2 or 3 months down the road, you can't dabble, so it's stuck there. So make sure that you don't put money into a CD unless you're going to be okay with not being able to utilize it. Next up, I put business savings account. Really not a whole lot different than high yield. I use these because I have to keep my money separate in my business account from my personal account, but nothing crazy. And we've got some other stuff in here. So mutual fund, dividend, aristocratic funds. It's kind of same ball as index, combination. Okay, well, that's a combination. Yeah, it's a terrible option. I don't even know why I put that on there. Bet it all on black. All right, so there are 3 people, Mike Bell, Anthony Tucker, and myself, who all said bet it on black, jokingly, but... and then we got this guy said, don't keep it. Keep buying companies I believe in regardless of the condition. Okay, yeah, but the point of this question was, where do you keep the money as you're building it up, right? Like if you blow all your money on an investment property, you don't have money for the next property yet, so you need to wait till you're building it up. We've got under the mattress, private lending, and we've got Bitcoin. Now, I don't know that I'm a huge fan of crypto because it's very volatile, probably more so than the stock market. In fact, I think it is much more so than the stock market, at least for now. Maybe over time it won't be. Private lending, I think private lending is a good option if you know what you're doing. Again, there's some downsides with not being able to pull the capital right away. So if you want to use that money quickly, you're stuck. The way I look at all these is it's a balance between how much interest you can earn so that you're not losing money to inflation and you're still building interest when you're not using the money. So it's still working for you, just not as hard. And how much risk you can take, because you want to find that perfect balance between a low risk asset that's not going to lose you a bunch of money, but something that will still earn you a decent amount of interest. So if you're storing capital for somewhat quick investments, perhaps a high yield savings account or a certificate of deposit is a good strategy, or even a home equity line of credit. But if you're doing some more long-term, you're saving up money for something that's going to take you a couple of years to save up for, maybe that's something you would want to put into like an index fund, because you can afford a little bit more volatility on the way. It really depends on your risk tolerance and how quickly you're going to need the money. So I like to keep the money fairly liquid. I usually end up with it in savings accounts or paying down lines of credit, because both of those are interest that I'm saving, and both of those are very quick access, and that's usually my go-to. So I'd love to hear your thoughts on where you guys keep capital while you're building it for the next investment, and maybe there's some other great opportunities or great ideas that I didn't catch in this group. So let me know down below in the comments, and make sure you subscribe to the channel and join the Facebook group so that you can be utilized in some of these polls and help us with creating some awesome questions. I hope you got something out of this, and if you'd like me to do some more roundup posts like this in my community, let me know what questions you'd like to know, and I'll do some more polls in the group, and we will see what they come out as.